Good afternoon, everybody, and welcome to today's Open to Export webinar on what exporters and importers can learn so far from the COVID-19 outbreak. My name is William Barnes-Graham, and I am the Senior Content Editor at the Institute of Export and International Trade. Just a quick note to say that we are all dialing in from home as per social distancing rules, so if there is a lag at any point due to home Wi-Fi's, please do bear with us. Next slide, please. Open to Export is a free online service helping small businesses get ready to sell overseas through our step-by-step articles and guides, regular webinars, our Export Action Plan tool, and our quarterly competitions. You can find out about all of these on our website at www.opentoexport.com. Next, please. Open to Export is powered by the Institute of Export and International Trade, the UK's professional membership body for traders. Endorsed by the World Trade Organization and the International Chamber of Commerce as a small business champion, we offer a unique range of individual and business membership benefits, education and training catering for beginners through to master's degrees, and an always exciting and prestigious program of events celebrating UK businesses' exporting achievements. Next, please. Now, the Institute has moved online, offering a range of online support and telephone assistance throughout the pandemic. This includes our online training courses and export masterclasses, international trade surgeries which can be conducted over the phone, online qualifications provided by both the Institute and the UK Customs Academy, a technical helpline for exporters, daily bulletins bringing you all the key trade stories, and of course, free articles and webinars on the Open to Export platform. With the government indicating that it's looking to press on with ending the transition period at the end of 2020, we do recommend you continue your Brexit preparations, especially as many of the Institute's relevant courses are still fully fundable by government grants. You can find more information about our support on export.org.uk, and please feel free to contact us if you have any questions. Next, please. We will be running a live Q&A later in the session, and you can ask questions at any point using the question box on the control panel to the right-hand side of your screen. The general principle here is that we'll only ask questions that are relevant to the broader audience, so we won't be able to go into company specifics as such, but if you do have specific questions, we can refer you to our technical helpline afterwards. You can also download a PDF of the slides at any point via the handout dropdown on your control panel, and you will also be able to watch a recording of this webinar on opentoexport.com/webinars within a day of it finishing. Now, before I'm going to hand over to today's speakers, we're going to be running a few straw polls throughout today's session, beginning with a two-parter to begin with. The first question is, which I'm going to launch now. First question is, if your firm sourced from China before the pandemic, is your business now looking to source more locally as a result? Now I'm going to give everyone a few seconds to respond to that question. And while I do that, I'm just going to talk a little bit about today's speakers. Later on, we'll have Joseph Dunkley from Cambridge Global Payments, who will be covering the foreign exchange swings throughout the pandemic and what exporters can do to mitigate them. And we'll also have Torsten Weller from China Britain Business Council, who will be looking at China's response to the pandemic and how their exit has been going so far. It's great to have both these speakers. They are very knowledgeable and yeah, should be very interesting presentations. So I'll just give everyone a couple more seconds. And we're coming up to 10 minutes, so I'm going to close that poll now. And some very interesting findings, as always with these straw polls. We have 66% say they will not be looking to source more locally as a result of the pandemic or looking to source away from China, but 34% say they are, so there will be some change. And the follow-up question to this poll is, if you are looking to move your sourcing move your sourcing of component parts or products, where to? So I'll leave that question again to be answered for a few seconds. And just while I let you answer that, just another quick reminder, you can request the slides from us, either using the handout drop down, or if that's not available to you, you can email us at admin@opentextbook.com and we can send you a PDF from there. So I'll just let people have a few more seconds to answer that. At this point, Torsten, if you're then ready to unmute, do you have any comments on the results to the first question? Obviously, 34% of people saying they are looking at sourcing more locally now, but the vast majority of people are not. Any thoughts on that?
Surprisingly, the results tally very well with the survey we did in March with our members, where we also had 1/3 of the respondents saying that they were looking for alternatives outside of China. So it's quite surprising that this proportion holds true for the participants of this webinar. So I guess it's a broader trend, like, or kind of represents a general share among British businesses.
It reinforces it. That's interesting indeed. And just to follow up with that question, in terms of where people are looking to resource, a lot of people are saying it's the UK, unsurprisingly, and EU is up there as well. Interestingly, though, it's 25% also saying the rest of the world, so that's not the UK, EU, North Africa, North America, or other Asian countries. So that would be Africa, Latin America, Australia. So that's very interesting. Right, well, I think at that point, I'm going to hand over to Torsten now to commence with his presentation. So Torsten, over to you.
Okay, hello. Thank you, William. Thank you, William. I hope everyone can hear me clearly. My name is Torsten Weller. I'm the China Policy Analyst with the China-Britain Business Council. And today I'm going to talk about like 3 things. The first one is like to set the scene and to explain a bit why COVID-19 had such a huge impact on global trade and supply chains, and then UK-China trade in particular. In the second segment, I'm going to address the most common problems that UK exporters and importers faced during the height of the crisis in China. So we address most of the problems they faced during February and March when China was in a lockdown period. And then at the end, I briefly going to look at some technological trends and developments that we can see, and which will probably be more pronounced in the future. So let's start with the current situation. Next slide, please. So one reason why the virus was had such a huge impact on like the global economy and global supply chains is that China is basically at the heart of the global trade. So it's the biggest exporter in the world. Last year it had 2 trillion pounds worth of exports, and it has the concentration of some major suppliers for business all around the world. For the UK, it's last year it was the 3rd largest trading partner after the United States and Germany, and it has overtaken other European countries like the Netherlands and France, like throughout the last couple of years. Next slide, please. So as you can see, trade between the UK and China has grown continuously, like since 2000, since China joined the World Trade Organization, and last year has marked kind of a new record. So China exported 46 billion pounds worth of goods to the UK, and UK trade has also increased considerably with 24 billion pounds worth of British goods sold in China. And if we can just take another data point that kind of underlines this this positive trend, is that last year the UK was the 3rd largest country of origin for trademark applications in China. So the biggest were biggest two were US and Japan, and then there were already like 24,000 British companies who applied for trademark certification in China, so even ahead of other big trading partners like Germany or South Korea. So there's a clear trend towards a growing trade volume between the United Kingdom and China, and this trend will likely hold true, even like though we might see like a brief kind of decline in numbers due to this virus. Next slide, please. So what are the biggest kind of trade items? So gold is always like a very specific item that we can leave out here. Apart from that, the biggest export goods from the UK to China are cars and energy. So GLR, BP are kind of the biggest export businesses from the UK to China, and are followed then by medical, pharmaceutical products, and machine tools and other machinery. From China, the pattern looks like kind of like inverse, basically. So you had telecommunications equipment, office machinery, and retail, which is kind of behind this miscellaneous manufactured articles item, and which is kind of like a very important item, and which has been also quite affected by the crisis, as we will see in the next slide. Next slide, please. So why was this virus so important? Like, just to do a brief kind of explanation. So Wuhan, where the virus emerged in, let's say, last December, late November 2019, is right in the middle of China, and is one of the major transport hubs between the kind of like hinterland and the raw material kind of producers, and the coastal provinces where most of the export-oriented kind of factories and manufacturers are concentrated. So once the province Hubei and the city got locked down in late January, basically every major company around the globe was affected. This graph that you can see on the slide was collected by Resolink, a supply chain risk advisory company, and it shows that you had, like, if you take into account like both second and third tier suppliers, so like suppliers of suppliers, then you had over like 10,000 factories that got immediately affected, and which then kind of disrupted the supply chain for factories all around the world. So, and after that, you could basically run down the clock. So it takes around 24 days for a cargo, a container from China to be shipped to the UK. And once this factory is closed in China, so you have kind of like a certain, like roughly a month before the factories on this side of the globe kind of have to shut down. So this was this kind of like immediate effect that you saw in the news in February, when it became clear that the Chinese economy had basically grinded to a halt. Next slide, please. So what were the problems that UK businesses in particular experienced during the lockdown? So we did in March a survey with our members to find out what their experiences were, and like suppliers especially had some considerable problems, and the three biggest items were actually delay due to like closure and the lack of workers, so basically delays of shipments, delay of taking orders. But the third one, and I think that is an important one, was that importers in the UK couldn't communicate with their suppliers in China, and that is in a way an interesting problem, because usually like communication between along the supply chain is one of the let's say most important kind of elements that is always like that you can hear in a lot of kind of seminars and textbooks. So if you want to manage a kind of like your supply chain risk, communication is always the top item. And for example, if you communicate with suppliers in China, so usually you have their personal like contact details. So a lot of communication goes on via like WeChat, which is the China's version of WhatsApp. And if there's a problem with the communication, it means that the communication like channel wasn't really good to begin with, or that there was some kind of like agency or middleman which managed these kind of supplies. So if this communication kind of like broke down during the crisis, that is a strong signal that that there was a certain kind of problem already in the supply chain. Next slide, please. When we look at the channels, then like C obviously was one of the most affected ones, as the ports and the bonded warehouses were kind of shut down or lacked workers to process all the goods. But one big issue for importers especially was the decline in commercial flights. So when British Airways and other big carriers kind of stopped servicing Chinese airports, that considerably reduced the number of volume that was available to importers, especially. So like this kind of belly cargo that goes with commercial flights. So what we saw was that for retailers especially, transport prices went up like threefold in early February due to the reduction in volume. And there was a considerable problem for a lot of like smaller businesses and SMEs in the UK. For exporters, on the other hand, the problem was less severe, as most of their production capacity is also already kind of in China. So as we see, like energy and car manufacturers, right? They have longer kind of production cycles. So the effect was kind of like less severe. But this impact on suppliers is clearly something that probably has caused us this certain amount of import oriented businesses to rethink their supply chains and to look for alternatives. Another slide, please. So when we now look at monthly bilateral trade, you can clearly see the downturn in February. But if we look at the first 2 months, which are usually not very strong, because you always have the Chinese New Year holidays, then the drop is actually less severe than expected. So if we take January and February together, then we see a 15% drop in UK exports to China and a 10% drop in Chinese imports. And we expect a rebound in March, simply because the Chinese economy has mostly gone back upstream, and because Europe and the US are still in the lockdown, we expect that the share of trade with China in the overall trade balance will actually go up. And the other information that is important to keep in mind is that the overall trade volume with China has gone up. So we are now basically at a level of trade where we were like 2 years ago, which is still quite high. And as I said, like the overall trend is positive. So we expect some rebound in March and return to growth in the rest of 2012. Next slide, please. This is also clearly something that we found in our survey. So most of our members remain optimistic with regard to the long-term outlook. The short-term outlook, of course, is predominantly negative. So we have over half of the companies said that they don't expect any growth in the next 3 months. But most said that they are cautiously optimistic for the overall annual result of 2020. Next slide, please. And just another example that points towards a positive turn is when we look at some of China's neighbors, like South Korea, for example, where we already see that trade kind of returned to an almost like pre-crisis level in March. And we expect a similar V-shaped pattern for UK trade. That is also something we saw like during the SARS crisis in 2003 when exports dropped and then kind of bounced back to kind of like pre-lockdown level, and where imports mostly were delayed but kind of like plateaued but didn't really decline. So we still expect a similar pattern for the COVID crisis. Next slide, please. Okay, so now at the end, just a few things where like a few developments and technological developments which we expect to be kind of more pronounced in the future. The first one is digitalization. I think one big problem that has become quite obvious during this crisis was that how much supply chain management still relies on face-to-face interaction, especially like at the custom clearance level. So I think that is something where we will see a fundamental shift in how that is handled. We have already seen some reforms in China where ports and custom offices have introduced like online forms and application procedures so that you can basically handle like all the custom clearance and all these information online, so you don't have to travel or don't need an agent on the ground to handle that. There are also initiatives that use blockchain ledgers to kind of complete these procedures. So there's a lot of kind of like movement in this area to kind of avoid these problems in the future. The second one is actually that we're going to see more cooperation between some importers and suppliers. The one effects such a crisis has on supply chains is that you always have these kind of like countervailing effects. So some supply chains that were already weak, as I mentioned with regard to the corporate communication issue, they will usually break during such a crisis. Whereas other supply chains where communication worked well, where there was a high level of trust among business partners, so they actually increase their cooperation and intensify their cooperation on this level. So this is something we're probably gonna see in the future as well. That those who have made like positive experiences during this crisis will likely intensify their cooperation in the future. Then of course you've seen like regionalization. This is the kind of like the other side of the coin, that those suppliers where the kind of the supply chain was not that stable or robust, they will look for alternatives closer to home, like in Europe. But the same will also apply to businesses in Asia, for example, or Chinese businesses where the the source kind of dried up. And another effect that is not yet, which is hard to gauge right now, but is that how many businesses actually have gone bankrupt during this crisis. So there will be kind of business that will have to look for new suppliers, and a lot of them will likely look for suppliers outside of China or in other kind of regions. So we will have this regionalization also like as a phenomenon in the near future. And then in the end, we've seen some technological transformations like with regard to 3D printing or the use of AI, which will also be kind of more pronounced in the future, and where we see new progress. And especially 3D printing might have a quite interesting or important effect on how supply chains are managed in the future. Last slide, please. Okay, that was it from my side. Thank you for your patience and your attention. If you have any questions or remarks or comments, feel free to contact me under torsten.weller@cbbc.org, and I will hand back to William.
Great, thank you, Torsten. I'm just going to do another quick poll before we hand over to Joseph. So I'm just going to launch this now. The question now is, how much cash does your business have in reserve? The options are 12 months and more, 6 to 12 months, 3 to 6 months, less than 3 months, or none. And we are applying for a government-backed loan. I will leave that for a few seconds for you all to answer. Thank you, Torsten, for a really insightful presentation there. We had a question actually in for you, which I might ask you while this poll is ongoing. This is from Judy, who's asking about, in terms of Chinese exporters, how are they faring now in the rebound, in the economic rebound? Is kind of manufacturing output kind of growing, and are Chinese exporters able to start shipping goods again? What's the experiences that you've been seeing so far?
Well, it's a mixed picture, to be honest. So there, we receive, or I'm seeing a lot of reports from China where you have manufacturers actually struggling, both with the drop in demand and still the lack of workers. So that is also a problem that still exists, that workers that kind of like spend the Chinese New Year at home in their villages are still reluctant to return to the factories in the coastal region. So these two problems persist. But on the other hand, you see a certain resumption of work in the bigger, larger factories and companies. And what you also see is that, especially the massive demand for like PPE, healthcare-related products, has also forced a lot of Chinese companies actually kind of to switch their production and produce surgical masks, other health-related products. So this is still something where, let's say, the final outcome is not yet clear, but we see both. So we see, like, on one hand, we see a resumption of work in some areas, but other smaller factories are still like struggling.
Okay, and just to follow up, I suppose, I mean, it's be interesting for when the UK comes out of it, but is the Chinese government, do you know if they're doing any kind of programs or policies which are helping the Chinese exporters to help to kind of through this period?
Well, there've been a lot of like policies, and mostly at the regional level. So one of the kind of most comprehensive policies was the policy that was adopted by the Shanghai government, the so-called 28 measures. And what you saw was on the one hand like a massive reduction of fixed costs. So you basically most businesses were kind of like exempted from tax or social security payments, and they were also very strongly incentivized to maintain people on their payroll. And there's still kind of like subsidies for healthcare related products. And what we see now is like for the more for like the domestic demand is like nationwide voucher programs, so that people get kind of vouchers to spend their money on on goods and kind of to kickstart the domestic consumption. What we don't see so far is kind of like some specific programs for like export-oriented businesses. So a lot of the policies so far from the Chinese government have focused on domestic demand. So like kind of consumption, retail consumption, and infrastructure spending. So that has been the major concern for now.
Okay, great. Well, I'll give you a rest for a few minutes now, Torsten, and I'll just show everyone the results to that poll. So 30% of people have 3 to 6 months cash flow or cash in reserve. Quite a few have 6 months or more. But yeah, there's a fair few there with less than 3 months or none. So that's 22%. That's 31% who are in a slightly more precarious situation. We'll go into a poll later on about the government's funding schemes. But for now, I want to, without any further ado, hand over back to Joseph to commence your presentation. So Joseph, over to you.
Thanks, William. Next slide. Thank you very much. Hello, everyone. My name's Joseph Dunkley. I've been working in the foreign exchange industry for about 10 years now. Currently at Cambridge Global Payments for the last 6.5 years, and predominantly looking at risk management products and hedging, but equally at international payments. Most of you probably don't know who we are, so I'll cover it briefly, who we are and what we do. And then in this presentation, we're going to look back at what's happened within the business community, how the currency markets have reacted, focusing, because there are a lot of currencies, solely on US dollar and euro against sterling, and how we can mitigate against that currency risk in the future, and maybe even some of the opportunities and benefits for some exporters may have seen of late. So next slide, please. Just a little bit of background about who we are. We've been going for over 25 years, founded in 1992, with extensive operations around the globe, as I say, with 2 primary focuses on risk management products and international payment delivery. Next slide, please. Next slide, please. That just covers a little more about who we are, but we can glaze over that. So I'm just going to adjust the way I'm seeing the screen so I can get everything on my end. So the global health crisis that we've seen with the Covid-19 is clearly an unprecedented one, and one that I think for a generation is the biggest one that we'll all see, has led to a global economic crisis. Torsten's covered most of those points, but the long and short of it is that countries shutting down, businesses shutting down, and people being furloughed and working from home has all impacted us in more than just a personal way, because I'm sure most of us are dialing in from home, and because we are now looking at a global recession that is looming, with the squeeze on a lack of spending, hard to get products to various places, uncertainty across most nations as to what their order books are going to look like. There's a lot of sitting on hands waiting to see how this pans out, and business models looking about how this is going to pan out change quite significantly every day, every week, because there's not much to map it to. But the government central banks have stepped in, of course, so they've paid people's wages, they've introduced fiscal policies to improve on liquidity. If we look at the UK at the moment, we've reduced our central bank interest rate to 0.1%, which is rather surprising considering where we were, but it is what it is, and we're doing it, and other central banks and governments are doing it to ensure that economies are stabilised in this trying period. In terms of what next, we've kind of covered that slightly, but most people anecdotally, or most businesses, are finding there's a reduction in orders or projects are halted, etc. But most are expecting these to be delayed. Covering Torsten's point earlier, the near term is what most businesses are chiefly concerned about. The medium to long term, I believe we feel this is going to recover. It's just the issues of cash flow, as you've already covered, may impact businesses significantly. So some will go into administration, some will fold, but medium to long term outlook is positive to a certain extent. It's just the immediate future which is posing the chaos that we find ourselves in. For example, the FTSE 100 suffered its worst quarter last quarter, down 24.8%, which is again quite a remarkable stat. And moving on to currency, which is going to be the main focus of this presentation, the pound fell to a 35-year low against the US dollar and against the euro 12-year low. So pretty incredible in extreme swings we've seen. Next slide, please. So focusing on the currency markets, the majority of people here, I believe, will be exposed to currency in one way or another. If you import or export, currency will certainly play a part, whether the people you're exporting to are paying you in their local currency or in sterling. Either way, it's a necessary evil, as it were, for us to manage and mitigate. Very difficult to do so when the sterling US dollar, as an example, which we're looking here, fell from 113.90 approximately on the 9th of March to 114.35 10 days later. So it's pretty significant. You know, a 15+ cent fall in 10 days. Most of you will know how currency markets move. That's a pretty significant fall. The last time we saw anything that steep wasn't actually too long ago. It was in June 2016 after the Brexit referendum, but that wasn't necessarily foreseen. But this is more of an impact because it's although the COVID-19 crisis was talked about, we didn't expect this impact. And the reason behind that we'll cover on to shortly. Some of the key highlights to take away from that are the lowest rates from 1985. So that does pose an opportunity, as it were, for exporters who are getting paid in other currencies like US dollars to maybe lock in some of those gains. But of course, if we're talking about where we are now and how we've recovered, you can see on the chart that we have recovered significantly, not as significantly as the fall. We're around 125 as we speak, but in this example, we're saying that around the 28th of March is where things seem to have stabilised around the 124, 125 area, as markets reacted to the impacts of COVID-19. Next slide, please. Looking at euro, again, it's a very similar V-shaped drop and rise, but we've got 115.50 again on the 9th of March. And again, looking at the 19th of March, we saw a 10-cent fall to 105.50, which again does provide somewhat of an opportunity to capitalise on gains for exporters getting paid in other currencies like euro. But yeah, we're looking at the lowest levels we've seen since 2008 then. So looking at the recovery, again, we seem to stabilise at a similar time around the 114, 115 area, which we currently in that handle now. Again, extreme swings in terms of market movement for both currency pairs that we haven't seen, as I say, for about 4 years. Next slide, please. It's probably important to understand why this has happened. So the COVID-19 crisis is probably a very extreme and polarised view of an uncertain catalyst. So it's causing global uncertainty across not just the UK economy or the Chinese economy or the European economies or the US economy. It's global. So everyone's been impacted by this. And as such, investors and financiers rush to safe havens, such as the US dollar or Japanese yen or Swiss franc, US Treasury bonds and commodities such as gold, and you'll see there not sterling. Sterling is not seen as a safe haven currency. It certainly lost some of its safe haven status amid the Brexit impact. So that's one area of why we've seen this significant drop. I've actually quoted Ned Rumpleton, who's the European head of currency strategy at TD Securities here, because he summed it up well. And I'm sort of, although you can see it, I am going to read it out. But he states, given the circumstances, the UK looks like a rather risky proposition right now. So sterling has suffered accordingly. Within this, we also think that the highly tense environment has made it difficult for sterling, for international markets to gain access to US funding for various dollar-denominated exposures. This has fueled this dash for cash, and we think this has resulted in GBP weakness. So what that means is there's been a tightness on liquidity. US dollar is the global currency. Anyone trading with China will know that. And there was a dash for cash. So lots of investors, businesses, whoever may be, were purchasing dollars where they could to get their hands on dollars because of liquidity tightening. We cover the next point, and going over something we've covered already, that Britain lost its appeal to investors before the COVID-19 crisis because of the uncertainty around Brexit, which does still exist. Last quarter, Boris Johnson reiterated that he won't request a transition extension by the 30th of June deadline. Having said that, I think rumours are that he probably will, because quite rightly so, the Brexit negotiations have and should have taken a backseat in the last few months, but that still very much exists. And understanding the British economy as well is important, because for decades we've run at a deficit, relying on overseas investment to maintain stability. So obviously, in the current climate, investment is going to decrease. Therefore, the stabilisation of sterling it has fallen somewhat. And because of our reliance on our financial sector, which is well publicised in the City of London and elsewhere, we are very vulnerable to global liquidity shortages. So that's what we saw throughout March and obviously where we are now. But the fiscal policies that have been introduced have helped, which we'll cover in the next slide. So next slide, please. Why the rise? So we've covered in 2 slides previous to this why we've seen, or where we've seen, sterling US dollar and sterling euro fall significantly and rise significantly in a relatively short period of time. Part of that is largely technical. So you have the adjustment following the significant crash, the global fiscal reaction by governments, central banks, which we've covered, such as the Bank of England or the Federal Reserve or the European Central Bank, has boosted sterling again due to our reliance on the financial sector. There's generally been an uplift in global markets, increasing market sentiment. That's going to be up and down. You'll see rises, you'll see falls, but from the significant market crashes we've seen across global stock markets, we have seen them recover. How stable that's going to be is anyone's guess moving forward, but that has helped sterling's recovery because, again, we're reliant on market sentiment. Safe havens such as US dollar won't be bought as much, and we'll see some rises as that decreases. Investors are arguably now more bullish, believing that COVID-19, the worst of it, is past us. I'm not so sure on that, and I don't think anyone is really, and this is one of the reasons we'll come on to shortly about the importance of mitigating currency risk. But we're hearing it from Spain, Germany, how lockdowns are going to be lifted, and there's rumours that the UK will lift some restrictions at some point next month, but it's anyone's guess at this stage. We're going to have to wait and see. And interestingly enough, the last point there is Boris Johnson's recovery. When he came out of hospital, gave the pound a boost over the Easter weekend, which was handy. Next slide, please. So the interesting point here is that I can imagine a lot of people on the call are exporters. There is an opportunity here amid the crisis, which I've touched on, and I've given you an example here of how, by, I guess, locking in some of those gains, if you have the ability to do so, could be quite significant. So if you were selling $1 million on the 9th of March, 131, you can see what you'd receive there, and if you're selling at 115 10 days later, the additional gain is actually 106,206.33p. Again, in a 10-day move, that is a significant gain. So what some of our clients have done is capitalised on those gains and locked into forwards or other alternative hedges going further out, or they've had some spot requirement and let's say they've been sat on some US dollars that they've been toying with what to do for a while. They've either targeted a rate of exchange via market order or limit order, or they've just gone ahead and either online or using a personal trader sold. The market swings that you can capitalise on through market orders, something I've just touched on there, so you can make a decision about, if the market does X, I'd like to sell Y. But obviously there is a quite a mega caveat to everything I'm saying here, because future orders are more uncertain now than they have probably ever been. So no business wants to overcommit to what they want to hedge. So we would only suggest you hedge what is certain, and that can be quite a tough question in the current climate. But there are certain industries, of course, that are benefiting. We've certainly found that anyone in the supply chain to supermarkets has seen an increase in activity. Whether that's going to drop off, we don't know. But if every restaurant is shut and everyone's buying their food from supermarkets, there's an obvious link there, which is there's an increased purchase within supermarkets. Next slide, please. Just covering briefly, because I'm looking at the time here, so I don't want to take too long. The key thing here is to take away what can you do to mitigate against these extreme market swings, and whether we're going to see extreme market swings again is negligible, because the importance here is how do you give yourself peace of mind. So we're going to run through risk management via hedging. Next slide, please. These are the key 5 points that we've identified, that you need to identify the nature of your FX exposure, develop a risk management policy internally, and obviously with your bank or FX broker, whoever you're trading with. Identify your budget rate. That means, pick a rate that's achievable, that's realistic, the one that makes you profitable. Select the tools and products. So it may be that you want to use a tool like a market order to execute a forward contract or an alternative hedge to achieve this objective, and then you execute that with a strategy. So these are the things to consider if you're new to hedging or you already hedge moving forwards. And next slide, please. I'm going to go over some of the points you just made, but in the current climate, whether you're importing or exporting, it's important to attain, we always use the phrase peace of mind, because that's what we're selling. That's what anyone who's selling hedges sells. You're selling peace of mind. The business you do is nothing to do with currency. Currency is just a necessary evil that comes in at the end. So to maintain profit margins, think about the following to give yourself peace of mind and execute accordingly. So think about your budget rate. How do you get that budget rate? How can you ensure that you're profitable? How certain are your orders? And this is probably a key question that most businesses are asking themselves. Hard question to answer, but in turn that will give you your currency exposure, and you'll have a forecast of when that is. You may wish to consider over hedging in terms of tenor in the current climate. If you're expecting that order to come in 9 months, perhaps you'll be hedging out 12 months for a delay in payments. And also, where do you see the market moving? And that may well change your view of whether you use one certain hedging product or another. And again, it's important for you to identify the various products available to you, either by your bank or your FX broker. I guess in the current climate, now more than ever. If I may just touch on our expertise in hedging, as well as forward contracts, which the majority of the market use. We also offer alternative hedges to forwards, which provide outperformance or enhancement of the current market rate. It can provide potential rebates if the market moves in your favour, and sometimes both. But where we differ from other outfits is we offer these products with fully flexible drawdowns. And if we go to the next slide, please, I'll thank you for your time. Similar to Torsten, I'm happy to take any calls, send an email if you've got any questions about what you can do to mitigate your currency risk and the options available to you. Happy to take a call, and I'll hand back to William, and thanks for your time.
Great, thank you, Joseph. Can we have the next slide, please? So yeah, thank you both for the presentations, lots of useful insight and information there, I hope. We're now going to answer a few of your questions in the time we have. Please remember that you can ask questions at any point using the question box on the control panel to the right-hand side of your screen. The first one I think would be for Torsten. It's just from Stephen, who's asked about the food and drink sector in China in particular. He's asked, what's the market size and what is the impact on food and drink exports, I assume, to China? So Torsten, do you want to take that?
Well, it's a very good question. I would ask, we have like, so I'm not an expert on the food and drinks industry in China, but my colleague, Antoinette, she would know the numbers. So if Steve could send me an email, then I could get him in contact with our food and drink specialist, and she can then help him to provide him with these specific information on the market size for the specific industry.
Okay, great. Yeah, so we'll circulate the contacts. You can reach us on after, and we can try and answer a question offline. Another one which will be for Torsten. Chris has asked, will the Chinese banks remain supportive of Chinese exporters, or will UK importers need to prepare to help fund any change in supplier terms?
Well, the overall policy is that like Chinese banks have basically been instructed by the Chinese central bank to be very liberal with support and loans. So currently the Chinese government is clearly following a policy to support exporters and Chinese businesses throughout this period. So I don't see the need for outside business to kind of step in for Chinese like banks or anything. So for now, there's a clear signal to Chinese banks to support like Chinese businesses without imposing too many conditions.
Great, thank you. A question we had in advance from Philomena, which is quite an interesting one. It's just what are your main top tips on strategy post-COVID? And if it's all right, I'll give you two each. So if I can give Joseph two top tips and then Torsten to come in after.
My top tip is know what is certain and create certainty around it. And obviously I'm talking here from a currency perspective, because orders are going to be reduced, I think, in the current climate. Whether they pick up again is another thing, but I would understand exactly what your exposures are and mitigate that risk with a hedge of your choice, as ensuring you're achieving your budget rate, because you won't have peace of mind, I don't think, with many areas moving forwards, but you'd like it in that area because it can be quite a fickle beast, the currency market. So that would be one. Another would be ensuring that all your staff, I mean, this is something that we've experienced firsthand, I might add, that all your staff that work within the business have decent communication with one another whilst working from home. We've had a really successful transition period to the home environment. I've heard stories where that's not been that well managed, but we found that that's enabled us to manage our clients' expectations, our own, make a seamless transition from a trading and dealing perspective as well as a sales perspective. But that is key, I believe, in the existing environment.
And Torsten, do you have any top tips?
Like the two things I could think of. I mean, the first one that we were kind of telling our members, like for a while now, is that to think regional more than just like in national terms. So if you look at China, if you have a strategy for only for China, try to expand that strategy and think about, okay, how do other Southeast East Asian countries and economies fit into that? Because as China kind of like China's economy matures, moves up the value chain, so you will have like an expanding network that spans all across the entire region. So it's probably good to have a like an idea of how to navigate that. So it might be that, for example, you import things from China, or you export your products to China, but then they're kind of like shipped to other countries, or they kind of are manufactured in Vietnam, then shipped to China, and then kind of sold to the UK. So you need to have a regional strategy that kind of takes into account this growing network. The second thing is, I think is something that you probably should do, or should have done for a while now, is just kind of pay close attention to the technological progress in China in particular, is how new technologies, like, I mean, it's like the digital payments and the way people communicate is often very different from how things are, or how business is done in the West and in the UK. So this is something you should really pay close attention to, and also have something like a kind of a procedure in your business to kind of monitor these developments, because they kind of affect how, for example, you can address such a crisis right now, right? So these communication problems, they're partly arisen from the fact that businesses in the West did not communicate effectively with their suppliers in China. And to avoid these things, it's very important to pay attention to how kind of like technology and communication evolves in China and Asia in general.
Great, thank you both. And I'm going to squeeze one last question in. It's from Paul, and it's a slight look ahead, but he's asked, obviously there's talk about a second wave of COVID-19 impacts on the global economy later in the year, which could have a harder or less of an impact. I mean, Torsten, in terms of what you're hearing out of China, is there any kind of anticipation of a second wave or any planning for it? And be interested to hear from Joseph and a hedging fund on that in a minute as well. But yeah, Torsten.
Well, the current situation is there are concerns indeed. I mean, there are two hotspots. I would say one is in Zhuhai. This is like in the northeast, on the Sino-Russian border, which usually doesn't really affect most Western businesses. But the other one is in Guangzhou, so like in basically the main industrial area of China. So there's some concerns. And there have also been some limited lockdowns again. So there is always this risk that like areas might be shut down again, like temporarily. And I think business are well advised to kind of take this risk into account. So there is indeed a very strong concern about a second wave, and there will be a lot of kind of like measures and limitations and restrictions that will remain in place for like the foreseeable future, and where business have to kind of learn how to live with.
And Joseph, from a currency point, do you anticipate there'd be another big kind of currency fluctuation, and companies should be starting to think about hedging ahead of that?
Yeah, I think it's the same point always from our point of view. There's going to be geopolitical risks always. I think the current one is a bit more extreme, but with a second wave, we can expect again liquidity shortages, uncertainty, etc., which will drive sterling down. You'd imagine it's quite possible that would happen again. Whether that's going to be a benefit or not to the callers will affect and impact the product choices they use, because first and foremost is give yourself peace of mind to mitigate that currency risk. But there are other solutions out there, other alternative hedges, which would allow you to potentially get a rebate upon expiry if the market does move in your favour. So think about where you think the market will go. think about what your budget rates are. Again, it's the same message, and take that risk off the table.
Great, thank you, Joseph. Thank you, Torsten, as well. Before we go, I'll just squeeze in one last poll question, and it's just about the government support which is out there at the moment. So just going to ask quickly, have you been able to successfully access any of the government's financial support packages? Yes, no, but I've tried, not yet tried, not needed to. And just while I let that run, I just want to say thank you to Torsten and Joseph. That was two really useful presentations and a good Q&A there as well. So thank you both. Just to remind everyone that you can download the slides via the handout drop-down in the control panel. And if that's not available to you, please do email admin@open2export.com after this webinar, and we can send them across. We'll also be uploading a recording of the webinar and circulating that not long after it finishes. I'll just leave that poll to one for a little bit longer. Just while that's going, our next webinar will be looking at how the pandemic is affecting export controls and licensing. There's been some news that licensing is still going on for exports, which are potentially dual use. Lots of controls as well on things like medical products and so on. So that would be an interesting webinar that's taking place on the 22nd, and that's going to have speakers from the Institute's export control profession and the government's export control joint unit. So at that point, I'm just going to close the poll. So most people have not needed to or not tried to yet, but there's a fair few people who succeeded and a few people, and the same number of people who have not succeeded but have tried. Obviously, we know that's a evolving story at the moment. So if there's anything, if you do have any experiences with that you'd like to share with us, please do get in touch at the admin@open2export email, and we'd be delighted to hear your stories. But if you could move on to the next slide, please. The Institute is continuing to support businesses through these trying times through our range of online training and support. For those of you who are working from home, our online support and telephone assistance includes online training courses and masterclasses to help you prepare for Brexit, international trade surgeries, online qualifications from the IOE and the UK Customs Academy, the technical helpline, daily bulletins bringing you all the key stories in trade, and the free articles and webinars on the Open2Export site. You can find out more information about all of our support on export.org.uk. Next, please. And finally, through these historic times, it's really important that we support each other and share information and wisdom around best practice in global trade and the challenges ahead. Membership with the Institute gives you a support network and wealth of information to ensure that you have everything you need to meet the challenges of global trade head on. And benefits include the technical helpline we mentioned earlier, industry recognition of your exporting credentials, a wealth of online information, daily bulletins, networking opportunities, and so much more. You can find out more information at export.org.uk/membership, and we're always happy to help with any concerns or questions you may have. That's all from us today. We hope you found today's webinar useful, and please do take our exit survey to let us know what you thought. But till next time, stay safe and goodbye.